The clock is ticking down to the verdict of the Federal Reserve. Markets are in suspense, ready for the hawkish rhetoric. The following press conference of the Fed's chairman is also of a great importance. First thought, let's sum up the results of yesterday's New York session. Most financial instruments implemented baseline forecast for our analysts. As a result, the benchmark stock indexes closed at the one-year highs. On the other hand, the US dollar and Bitcoin retreated. Fresh inflation data agitated Wall Street, but investors did not give up the risk-on mood. The Dow Jones benefited from the fundamentals and closed the session at the highest level since January last year. The Nasdaq updated the highest point since March 2022. The S&P 500 gained 21 points or 0.46% to close at 4,643. The major stock indexes traded with a moderate optimism in the New York pre-market. Futures on the stock indexes inched up by 0.07 and 0.17%. Anxiety escalated in the early New York trade. Investors will be able to form market sentiment after the U.S. Central Bank unveils its policy decisions. Obviously, the market is doomed for a roller coaster tonight. The S&P 500 has not made intraday moves on more than 1% for over 2 weeks. The index is expected to trade in the intraday corridor between 4,630 and 4,670 points. Following the Fed's announcements, the instrument could either rise to 4,700 and 4,740 or nosedive to 4,580 and 4,540 points. The fundamental background for a rally on Wall Street was dubious on Tuesday. Inflation has been easing indeed, but not as fast as anticipated. In this context, expectations of a rate cut by at least 25 basis points in March declined to 43.7% from 50% before the inflation report. The S&P 500 was also hurt by the energy sector. As such, stocks dropped by 1.35% because oil prices tumbled by nearly 4%. Nevertheless, the high-tech sector was one of the most efficient. Before the opening bell on Wednesday, the stock market came to a standstill, awaiting the highlight of the day and the policy decision of the rate-setting committee. The policymakers will hardly make a surprise decision on the interest rates. Markets are alert to the central bank's dot plot and summary of economic projections for 2 years ahead. Until the Fed unveils its decisions, the market is digesting fresh data on the US factory inflation. The market welcomed the PPI for November. The index grew slower than expected, following a 0.4% fall in October. The PPI looked zero growth instead of the projected 0.1% uptick. Core producer prices in the United States, excluding food and energy, stayed flat from a month ago. However, the core PPI rose by 2% in November, down from a 2.4% increase in October. Analysts had projected a decline to 2.2%. In anticipation of the Fed's announcement, Wall Street found some relief in factory inflation. Experts reckon that Jerome Powell will hardly acknowledge the landslide victory over inflation, and the Fed's leader is expected to come up with cautions and even hawkish remarks. As for the terms of the Fed's policy reversal, analysts express polar opposite viewpoints. One camp believes in the first rate cut in March with a total 1% decrease in interest rates by the end of the next year. The other camp does not foresee any policy reversal at all, and the mystery will be cleared up soon. Unlike the stock market, The currency market is braced for a few policy meetings of major central banks. The US dollar regained its footing yesterday, but stumbled over weaker than expected factory inflation. Thus, the US dollar index went down. It was trading at 103.80 in the early New York session, 0.03% down. The baseline into the Canada is determined between 103.70 and 104.10. The Fed could intrude in the forecast, and the hawkish rhetoric might push the index up to 105.20. Alternatively, the dovish Fed will push the instrument down to 102.80 and 102.60. The greenback grew at midday amid a slide in the major currencies. The pound sterling showed the worst performance after the UK GDP report. The British economy contracted in October, thus raising recession risks and complicating the Bank of England's decision making before the verdict on interest rates on Thursday. The balance of trading forces could change radically today. Analysts had already proposed a plethora of forecasts. And let me remind you that the central banks of the UK, Norway, Switzerland, and the ECB are holding their policy meetings tomorrow. So what about the Canadian dollar? It went under selling pressure yesterday due to a considerable decline in oil prices. However, the greenback's retreat saved the loonie from a collapse. And the USD CAD pair slipped to trade at 1.3560. The instrument is expected to trade in the wide intraday corridor between 1.3480 and 1.3690. Oil prices fell to the lowest level in 6 months at midday, having lost almost 30% in a mere 10 weeks. Crude oil is on a track to an annual plunge of 10%. Under such fundamentals, the Canadian dollar is doomed for weakness. However, the dovish rhetoric of the Federal Reserve might encourage the loonie tonight. And let's talk about crypto market. Crypto market is indifferent to the agitation of the stock and currency market. Digital assets are sensitive to another regulator, the US Securities and Exchange Commission. Still, it does not make sense to neglect the outcome of the Fed's meeting today. Sharp changes in the Fed's monetary policy could either step up the risk appetite or completely dampen the interest in risky assets. Bitcoin traded quietly earlier today. Having grown by 0.8%, the token opened the New York session at $41,440. As for intraday outlook, the baseline scenario suggests an intraday corridor between $41,100 and $41,600. If the bears assert their strength, the price could drop to $40,600 and $39,800. And on the contrary, if the bulls take the lead, the token could climb back to $43,200 or to $43,980. Our market review is over. If you have any questions, our analysts are open for any feedback. InstaForex keeps you updated on recent market developments. So subscribe to the channel and see you online tomorrow.